want to get you set for the trading day. We're seeing obviously a little bit of a wait and see mode for Fed this afternoon, but we've had a lot of movers, a lot of big action and new highs. Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners, is with me here on the desk on our first week in our new show. So glad you're here to give us your market perspective, Jonathan.
Hey, congratulations on the new show.
Thank you.
Thanks for having me on. Happy to be here. Yeah, interesting day, right? We've been waiting for this day for quite some time. I can't remember a Fed announcement that has been so anticipated, important, orchestrated, a lot of drama around it. Clearly, where the market has priced in a 25 basis point cut here, but it's going to be all about the wording. What does Powell say? Does he come across with this wait and see mode, which I think the market would have a very negative impact of? Or does he come out and talk about, some calculated measures that the Fed is going to take? It's very important what this wording is going to be. Keep in mind, this market is somewhat fragile. Even though we are trading at the highs, we still have the same headwinds that have been in front of us, our geopolitical risks. We still talk about tariffs. Clearly, interest rates is a hot topic there. So I think anything that might spook our market, even a small scare, I think might have a rather big impact on our markets. I might expect anywhere from a 3 to 4% pullback over the next few days, but keep it all into perspective, right? If we don't get what we want, keep it all in perspective. Markets are up significantly so far this year. S&P up 13%. We're up 30% off the lows. So a nice return is already baked into everything.
Yeah, I wanted to go through that a bit. Like what kind of knee-jerk reactions we could see. You're talking about a possible pullback of 3 to 4%. If you get the 25 basis points, which is what's baked into this market, sort of what happens next. The likelihood of 50 basis points is slim to none, but you never know. Do you think we see knee-jerk reaction? And what's the 3 to 4% you're referring to? Is that if we get no cut?
We are going to get a cut today. That is going to happen. My interpretation of is what's the wording that's going to come afterwards, and does he give us some sort of path?
Right.
As much as we would like that, we don't always receive that. But I think as sensitive as we are in this time of year and talking about how many rates we're going to get, we're going to get before the end of the year, if we don't get some measures, nothing definite, but if we don't get some steps as to what the next few meetings are going to look like, I think that's going to have a negative impact on our markets.
I don't think he gives that. I don't think he doesn't give that. He always says how the Fed is data dependent, and I don't think he's going to say, well, the labor market is the pits and it merits a cut in 3 of the next meetings. I mean, we're not going to get that.
I don't disagree with you at all. It's just what the market expects is quite different than what we're actually going to get. I think the market is expecting a little bit more clarity as to what the next 3 months are going to look like. What we actually get is going to be a little bit vague. And when we do get that, which I do think we will, that's when I think the market is going to pull back. It will be a knee-jerk reaction. But then in a couple of days, it'll settle back in next week. And then we'll start playing the getting towards the end of the month, getting towards the end of the quarter, leading into the fourth quarter.
So that pullback could be a buying opportunity.
It could be very much a buying opportunity.
When I think about what we hear from the Fed here and the knee-jerk reaction that we get, the big picture sometimes, ultimately last time the Fed cut, the 10-year bond didn't actually go down. It ended up going higher. And there's a lot of anticipation and hopes for lower rates, right? But that may not happen.
It may not happen.
What do you think is the likely sort of path for the 10-year bond yield?
Yeah, we continue to see a big disconnect in the bond market tied to the equities. And look at the VIX tied to equities. We're trading at close to all-time highs in some of our indices here. With the market up, like I said, 13% so far this year. The VIX should be trading between 12 and 14, 12 and 15 at this point. It's trading in the 16s at these levels here. There is this complacency in our markets, and I think when we have that complacency is when we could get some things disrupting our market rather quickly.
I want to talk about your investment strategy, but we've had a lot of IPOs, and you and your team, the Meridian Equity Partner team, you're there, you're at the post. It's been exciting. We had 6 IPOs last week. You have StubHub here today. There's another one, Netscope, I think, today. Some are at the NASDAQ, some are here. How does it feel? Are you really feeling like, it's sort of a normalization or a resurgence? How does that action feel, and what names have been exciting to watch?
Yeah, let's kind of just take a step back a little bit, and I'll go way back to to 2020 and going through COVID and coming out of COVID, there were many companies that were looking to go public. And with the uncertainty of our economy and our global economies, many were shelved for quite some time, right? And then we turned that rolled then into the election cycle, right? Not knowing who was going to be president next. So now that we're in a new election period, right? A new administration. You and I spoke about, how this White House is very pro-business and pro-economy, pro-capitalism. We've started to see this money coming off the sidelines. These companies that have been wanting to IPO, who are finally coming to market. Money is becoming a little bit more flowing, a little bit more freer. I think companies are looking to spend some more money and raise more capital to start investing in their own companies. So the fact that we're starting to see all these IPOs coming back to our market, I think is an incredible sign for our economy. And we're starting to see some very big names, right? We saw Figma, we're seeing StubHub. We've got these great names that are coming to market that have been sitting and waiting for the right opportunity. Not saying that the right opportunity is now, but it just feels like we're at the point where the timing is right.
So it brings some optimism. What's the investment strategy? You did mention a pullback,
yeah.
that would be a buying opportunity, because then we'll get to end of the month and likely to see some new highs again, I guess, between now and the end of the year. What would you step in and buy on dips?
Yeah, I think if we start to see a pullback in the market now, we're going to see a shift out of technology into more defensive stocks. That'll be over a short cycle of a couple of weeks. And when we do see that, I think that's your opportunity to then get back into the technology sector, where we're going to start to see some cheap prices. We've been talking about your lead in with NVIDIA and how we're seeing a lot of volatility in that stock lately in the headlines. There might be these opportunities that come to market there.
So when you think about tech, I mean, is it the Mag 7 or is it more than that? Is it all things AI?
Unfortunately, any headline that's associated with AI, we clearly see the implications of that. I think you could, diversify your portfolio outside of AI stuff, but clearly if you're looking for a sector that's going to benefit after the market sells off and we bounce back up again, you're not going to time it perfectly, but keep your eye on those Mag 7 stocks, because if we do see a pullback in them, we do know, based off of history, based off of charts, based off of fundamentals, that they will bounce back up again.
And in the meantime here, when we think about the big picture, when the clients are calling and they're asking you questions, what are some of their questions that they ask? I mean, you must be fielding different questions on a daily basis. Yeah, I think
from more of like a macro sense, it's more of just the headwinds that are there. Like I mentioned before, we still have a tremendous amount of geopolitical risks that continues to be out there.
Do people want gold? Do they ask you for gold, like maybe GDX or things like that? Gold, do you find them in the miners, or is that
you can find it in the miners,
haven?
but it's become a little bit more of a safe haven at this point, and we start to see that when there is pressure on the market. If we do get the VIX to spike up again above 20, you'll start to see that rotation into some of the more safer sectors and the safer commodities that are there. But I think there are those headwinds that are in front of us. Geopolitical risk. We still, we haven't made any really major tariff deals out there yet, right? We haven't have one that has had a major implication. So there's certainly a lot of uncertainty in some areas that can come to fruition and put pressure on our markets.
How would you quantify people asking you about trying to get into Bitcoin or a micro strategy or something exposed to Bitcoin if it's not a Bitcoin ETF? I mean, in the last 6 months, have you heard folks asking you more and more about Bitcoin?
Yes, right? And
a lot?
It certainly is a topic. It's a topic of conversation. Should I have that in my portfolio? We have an administration that came into office that is pro-cryptocurrency, right? And I think having that backing behind it, we see what the Trump sons have gotten their hands into.
Yeah, we just had another one with Eric this week. That was yesterday.
Another IPO.
So what do you tell them? Do it or don't do it?
You have to have some exposure to it, right? And just be under the suspicion that you don't have your full knowledge of the product and how it works and the backing behind it. It's strictly supply and demand. The regulatory aspect of it has started to tick up a little bit, but we're not at a point where it's regulated like our markets are regulated here. You should have some very minor exposure to it.
All right, John Corpina, 6 minutes to the bell.
That's it. We got to run.
So you better get running.
I
know you got to get to the posts and get to the action. John Corpina, Meridian Equity Partners, thank you so much.